Welcome to my channel, guys. Today I'm going to review the KILT protocol. Now, if you're new to how this channel works, what I do is I do research, I feed it into a model. The model has an output, reality shows whether the output is correct, and then I reflect and modify the model. And that is the strategy of the channel. And basically, it's got a 2 to 5 year horizon on this model. This is the model, and the project is KILT. So what is KILT? What problem does it solve, etc.? It is a identity protocol for issuing self-sovereign, anonymous, verifiable credentials and decentralized identifiers. Cash flow is in the form of digital credential servicing. So digital credentials, diplomas, driver's licenses, surgeon authority, whatever. This is a type of protocol that would service any type of broad scope concept that you can imagine with credentialing. It could be workflows, it could be medical situations, whatever the case. This protocol allows for businesses or individuals to set up a trusted verifier, and then the blockchain is used to authenticate whether something has been authenticated by a particular authenticator. So it's a workload like that. The problem is centralization of data. So you know, this this that I'm about to go over, these two broad descriptions of KILT, are directly from the CEO himself in several of his talks, and in several of their conferences. So one of the problems that he identifies is centralization of data silos. There's a security risk to that because you have all the data stored in one location. So it's a breach location where people's data could be stolen, and we've seen this happen in several cases. So, and there's also bad business models like Facebook, monopolies, AI. One of the really bad things about our future is if we have monopolies of AI uses huge amounts of data. So if we have centralization of data and we have monopolies of those data silos, that could be really bad for monopolies of AI. And that could lead to a bad future where some companies are in absolute control of the entirety of the human race, because AI is our future, and that's going to be a large component of what happens to humanity. And if you have centralization of data silos, that could be the end of the human race, or it could be companies that control all of humanity through AI. The solution is legal frameworks, as the CEO spelled out, as well as companies such as this one, the KILT protocol. So why do they even use a blockchain? There's this so the blockchain is a tamper-proof ledger, and it is public, and a service requester trusts attesters, which is attesters' right to the blockchain, and compared to the blockchain. So basically, the attester writes a number to the blockchain that is written in the document, and only the attester can write into the blockchain or write in a specific environment to the blockchain with some authentication keys, etc. And so that proves that if there's a key here and a key here, you know that the document has attested by the attester and met the threshold for whatever that attester needs to be met for that verification process. Example would be like a university or etc. Those who have authentication right to the verification. So basically, that's a simple form of what why the blockchain needs to exist. All right, so let's get into the model and see whether or not this thing is something that could produce good outsized returns for us. So the model was indifferent for future increase in demand for the token. It was a neutral output. You are not early to social media based on the metrics there. And thus we had a neutral price expectation for some of the FOMO, price fear of missing out. Inflation rate is relatively low. Governance functions, giving loyalty to the token holders and controlling interest, etc. So it's not the biggest inflation rate type of situation. And the price action is not under any FOMO. We are in a bear market, so you're going to get a lot of green in the price action, because when the prices are moving down, when prices are going sideways or down, and there's not a lot of super hype, that's when we can expect to see green in the price performance, because that is when you would want to enter. And the performance of KILT is at negative 81% versus the average crypto, which is negative 50% over since January of 2022. So it is not under hype. So that's a good thing. It's as of this moment. Regarding dividend irrelevancy or price movement to a PDE, I don't expect that to be a contributing factor based on token economics. Token supply distribution, 40% distributed, but those metrics are not that bad either, given the governance characteristics. Now, the low market cap, it's not extremely low market cap. Circulating is 76 million, diluted is a quarter billion, and the price is 80 cents. So it's not a super low market cap. Tokens on the sell side decrease. So all these things over here neutral. All right. So as far as the token design, the token economics, it is on a parachain on Kusama. It's used for payment to collators, the attesters and validators of the blockchain. KILT is it isn't basically the .ksm governance token. And it's control of the treasury and control of it as an entity. The token it's also used for payment, staking, on-chain utility, etc. So it is basically the collateral, and it is the governance for the protocol. So it's in essence, the token is control of the protocol. Now, a lot of the reason we see neutral price expectation is because credentials management it's growing about 7% inflation adjusted each year. That's probably going to grow to a lot more as you'll need more authentication procedures in the future as we become a more futuristic society. So we'll see where that goes. But right now it's relatively small. It's $1 billion market. Blockchain will completely take over the authentication market. So that $1 billion market will be completely absorbed by blockchain. But it is a relatively small market as far as like how much revenue you can expect from it. So that is that. Let me see here. All right, so I'll go over the decentralization degree. It is relatively centralized right now because it needs a team to survive. The vision is AI threat to monopolization of data centralized. So this is an extremely important vision, as we saw earlier. And the team looks trustworthy. They have a bunch of grants, etc. They have developer experience, so they're trustworthy from that perspective. But this does require trust because it still requires the team to deliver. And it's not run by the community, not yet anyway. Success depends on the team delivering. It's not open source distributed community yet, but eventually it will. Eventually the community will take over. And when the community, when the tokens get distributed, when, basically the community taking over. If the team was to walk away, it would die. That's what I'm saying as far as it being centralized. But if eventually it is community run, then that would be it would move up the ranks of decentralization. Token is ultimate control, so that is a good thing. And so we expect high quality actions from the team because they care about the token surviving. But one of the things you're doing is you're betting that they will continue to work hard and deliver. Now, regarding the team, I did put neutral for the rank because there's no major home runs in their history, no billion-dollar startups, no major inventions, or a million customers on any of their things. But like whether or not they're trustworthy, they're very intelligent, understanding, straightforward, and they address market elements that are true and valid. They got web3 grants, Polkadot ecosystem. They're working with basically a lot of their partnerships are in the Polkadot ecosystem. Akala, Moonbeam, and Centrifuge. So they're going to be well integrated in that ecosystem, and it's one of the best ones. All right. So that's the team. And so like the design of this thing, I expect high value upgrades, developer motivation, developer experience, to all be good metrics. I do actually think that they are one of the best options of the competition for authentication, verification, distributed databases, because we're in the Polkadot ecosystem, and that's one of the best places to be. But once again, the market is kind of small, and that's what like why I got a lot of neutral pricing on a lot of these things. But that could grow a lot in the future. Based on people's imagination, and there's also if they go into other areas like NFT. Like asset authentication or asset identities or protocols. That could almost like what this other protocol called Luxo does. If they were to go in that direction, that means they would compete with Luxo. That would be something that. But the thing is, Luxo was built from the ground up to do those things. This one's built in a different way, but it could definitely add those features because it is in an environment that allow for it to be quite versatile. Because it is in a Rust environment on the Polkadot, and so it could be. It could have quite a lot of capabilities. So it depends on if they go in that direction. I haven't seen that movement yet, but that could open them up to bigger markets, and so that could be potentially bullish as well. So I'm going to go ahead and say that if they go in that direction in the future, they make those movements. As of right now, the the market that size is relatively small, but I do expect them to have a moat with the customers that they have. First mover, these are. I haven't seen many other companies doing this, but there are some in the Cosmos ecosystem. But this Polkadot, I believe, is just a stronger design. Flywheel's neutral. Now, the token economics, I didn't like them as much on this project, so I don't expect large business models to demand the token. Just because it's it's just to validate collators and things like that. But they could design it in the future to be better. Just payment to collators and in governance. So I don't know if business models would want to participate in the governance, but those who use the protocol will probably, those who want to own this, those who want to be like equity holders, so to speak, will want to be participating in the governance, etc. No major onboards and user experience. I think those are all going to be good things. They're going to eventually become easy to use. Value of services provided to increase. I expect that to be the case. All right, so that is the model. And another thing that was negative, liquidity depth. There's not a lot of liquidity, so it doesn't have a lot of price support yet. So it's got a high market cap, relatively speaking, for having such low liquidity. You want to know that it's going to be price stable, etc. If at these price levels. Exponential growth, difficult to verify. I couldn't find any data on that, but it's niche. Some of its services are live, but I put it as neutral as well because I couldn't find the data, and it's got that low liquidity element, so that's why I put it as neutral. So yeah, that's the model output there. All right, so summary. Low market cap with accomplished CEO, I put no. Early to social media, I put no. Live niche, I put yes. Pros and cons summary. Team are builders. They've been building a lot. They've been doing a good job at building a lot of technology and building a lot of services, so that could potentially get them a lot of adoption in the future. They get a lot done. No hype in price, so that is a valuable thing, and they also offer a valuable service. The cons, relatively small market. I don't, when I did research on the authentication verification market, it was relatively small, like $1 billion market. And there's many cryptos that are servicing hundreds to $1 trillion markets that have the same, have a $1 billion market cap. This project to get to 1 billion is a 4x, whereas there's many projects that are at $1 billion market cap that are servicing something that's a $1 trillion market cap. Like Polkadot itself is a $10 billion market cap, and it could potentially service trillions and trillions, right? So there's better cost benefit analysis is all over the place in crypto. That's why I think it's relatively small. It is like a traditional company, in my opinion, on that spectrum. And the team has no major home runs, as I mentioned earlier. The roadmap has nothing exciting or hype-inducing. The token economics is a bit weak. Regarding the roadmap, I didn't miss out. Here it is. There's nothing extremely exciting about it. Just building out more of their services, decentralized, just more services for their decentralized identification services. So it's just more of that. All right, guys. So next is my Patreon evaluation, my exclusive decision making, etc. If you guys want to know more, subscribe to Patreon. If you like this kind of content, please like and subscribe. I try to put out unbiased evaluations, and this model is an attempt to correlate to high ROI opportunities over time. If you like that kind of stuff, please like and subscribe. I'll see you guys next time.